Welcome to Profiletraders. This is Reza and you're listening to my market analysis for this October the 28th. So we got an FOMC announcement today, and obviously they were not able to touch the rates, and they indicated that the reason, or the main reason, that they didn't do it is because job market growth has slowed down. But then I am listening to this silliness. I'm going back and listen to what she said not long ago, couple of weeks back. She came with this clownish claim that United States is at full-time unemployment, very close to full-time employment. So unless I'm completely stupid, if you are very close to full-time employment, which according to Mrs. Yellen, every single body that wants a job has a job, more or less, how do you expect unemployment not to slow? If unemployment comes to zero, of course it's not going to go -0, it's going to slow, because it's already so low that how much lower can it go? So either she doesn't understand, the poor woman, what she's talking about, or either it's a full-blown silliness of a fraudulent lie about our 5.1% bozo number that she's claiming for us to have. Because if we are at full unemployment or full employment, it is normal that it is slowing. It is normal that job creation is slowing. And if it is not, then please stop giving us crap about 5.1%, the dream number that you have in your brain, and that we are near or close to full employment here. Anyway, long story short, they were unable to touch the rates. All along, either they leaked the information to the insiders way down there to give them such a confidence to go ahead and sell the house and buy the casino without any hesitation, up to the point where this, which was a crash down, ended up being with a complete crash up. Because trust me that if this was on the way down, right now everybody would be crying crocodile tears. But because it's on the upside, 200 plus point of a rally parabolically up, nobody cares. Because you know why? They would have no problem if this goes up another 400 points straight from here. As long as it's on the upside, nothing is wrong. So now we shall see, because the last time we were here, many times we failed to bring in new interest on the upside and break higher. Now we could be that the Federal Reserve gave the market a clean green light to go ahead and follow through with this phantasmic and orgasmic orgy. Then there is a possibility that just to mess around with everybody and everything, come up and break this 2115 high. And then once they do that, my suspicion is that it's going to immediately bring in a bunch of imbeciles and idiots that will buy that break, not taking into account that once we're going to be up there, we will have about 250 points rally already behind us. And then from that point on, trap them and reverse, and I believe some kind of an outside event that will be out of the control of the market, and the Fed will appear up there that will justify a drop. If this market was only and solely based on its real nature, which is corporate earnings, corporate valuations, the state of the economy, the global growth, the United States growth itself, we should be trading at 1400 on the S&P. but this market has unfortunately gave up on anything and everything, and it has become a very simple interest rate play. Rate hike rumor, rate hike discussion, we crash. No rate hike, free money, 0% interest rate, orgy for all. As simple as this. Now, valuation, earnings, PEs, business, revenues, profit, all in a big Turkish toilet. That's it. So now no rate hike. I guess let the orgy continue. And by the way, this orgy will continue and nothing will happen until we do break below 2050 as we are. And on the upside 2115. Now what I was telling you is that the possibility that we would go up, break this all-time high in ES, trap people and then reverse. This is exactly what they did with crude. They took it down to very critical support that I was mentioning to you long ago, 43.8. Broke it. As they did break it down, they brought in a whole bunch of dummies on the sell side that thought it's a great idea to sell after already 8 points of a drop. They all got trapped, cut, and the result now is a utmost brutal reversal to the upside. This is what's called a bear trap, and what I'm expecting will happen at the top up there will be a bull trap. So now, same thing, as long as we remain above 44 to 43.8, upside objective is 48 first, and then back to the top of the consolidation up there, right around 50. Now let's look at quickly at gold. So today, basically, it was a silly gold play, which was, it went up, and then as soon as it came, Federal Reserve came out and announced this joke that we are below the inflation target, making us believe that there is no inflation, except that every time I step foot in my grocery store and come out, there is a hole of $40 into my pocket. But that's not inflation, ladies and gentlemen. When you buy a pack of eggs for $5 and 3 tomatoes for $7, no, ladies and gentlemen, that's no inflation. We don't count food, we don't count energy when we calculate inflation. We count, I have no idea what the hell we count, but whatever it is that we count, it is showing us that you, the mortals out there, do not have an inflation problem. And when they heard that, they sold gold. But again, look at the sell volume down there. It is not backing up the severity of the price reversal. Therefore, I believe this will be temporarily, and I believe that sooner before later, we're going to get a reversal and for a continuation back to the upside. Right now, critical support remains at 1140. But if we do break that, we could come back for a touch of that trend line, at which point it will be the mother of all supports. On the upside, we need to clear 1180. If we do that this time successfully, we should go for a test of the upper channel at 1200 up there. This was Reza with Profiletraders. Thank you for listening, and to the next time.